Welcome to TradeTheMBI.com. This is John. This report is for the 18th of July, and the bull is back. So we talked about the necessity for Magenta to move over, and it started to do that on Friday. From a daily standpoint, we were already seeing the pivot of green beginning in the pre-market, and of course I talked about this with the rising gold. It was always critical. So it had all the elements of potential push. 39.72 is 50%. We're now above 38. That makes it pretty easy here. 38.93 is the 38% level. So above that continues to be long biased, and below it maybe some softness, but with these readings should still be in a power bullish standpoint. Some people say, well, how can that be given all of the numbers and everything looks so horrible? Well, the market is already calling the end of the recession and the beginning of the new quantitative easing by the Fed, that they will be forced to stop. That's actually good news also for the euro, because the euro situation is desperate. If it continues to outpace inflation, they're offering negative rate returns, and it's just an ugly scenario. So this is the best of all worlds. Are they living in fantasy land, or is that something that's going to come true? Well, they're front running, there's no question about it, because we're already seeing the slowdown, bank earnings and that. So those are all going to be affected. So they're just pre-buying the Fed slowing down and or stopping rate increases. From an NQ standpoint, it's been stronger all along, continues to be so. It already has green just almost about to cross over. So if it can maintain this, it will be able to. Now, do any of those risks and headwinds still exist in the economy and everywhere else? Absolutely. And at any time, can we start to see a trail off as people think, okay, I'm going to sell into any bounce? Yeah, and you know, when you're looking at the euro, I mean, it's taken a huge dive. The bounce back would typically be to the 135 range. I think it's pretty hard to get to that from what we're looking at from a Eurozone, with the amount of debt that every one of the states is running, and they're all just shifting it onto the ECB, who puts it into their other facilities that nobody really wants to buy, so they just put it onto their balance sheet. But at the end of the day, it's basically just keep putting more money to underwrite huge deficits from most of the locations. And Germany's going to bear the brunt of it, particularly from a capitalization standpoint, but worse for them is the energy situation. And unless that changes, there's going to be some problems come the fall, and we could start a whole new round of talk about whether the euro will survive or not. And of course, the depression in gold continues. We're starting to get to an automatic little bounce back area here with the DOC at the minus 22 range. You always tend to get a little bit of a pop from that degree of deficit, but clearly the market from a gold standpoint is anticipating back to quantitative easing 100%. And oil, the easing in oil is significant because, I mean, that's over a 20% move. We had a low all the way down to 87, we're back up to 96. If it shoots back to 100, this has been helpful for a couple week period. Moving back into it again, any of this little easing certainly helps reduce the amount of inflationary pressures, and that's what the market is counting on. They're suggesting that, you know, the rate of increase for prices is going to slow. Not that it's going to stop; it's still going to increase, just not as fast as it has been, because certainly people couldn't handle the rate of increase. Now, what they really aren't taking into account is the real driver is going to be food prices and where they start to go, and that could get very interesting with the fertilizer situations around the globe and the amount of hunger. Some people have already talked about this. I've even mentioned it, the mass migration that should head to Europe from starving Africa that's also suffering from quite a few civil war constructs could be significant and will also play an impact on deficits and spending, which will just further exacerbate the situation. TLT continuing to lower rates, so it's been a nice drop off from the peak rate all the way to here. Just a significant amount of demand, and again, this expectation that the Fed isn't going to follow through, but pretty certain that when they tell you they're going to do something, they said they were going to do the quantitative easing, they did it. Somehow people just automatically assume they're lying when they say they're going to keep raising rates. It's kind of funny. Now, will they go too far and generate a recession? Probably. Bernanke did the same thing in 2007, which caused the entire housing collapse and the financial crisis. Now people might say, well, there was a bubble prior to that. Yeah, but you could have been a little bit slower in the number of rate increases that they did back then that would not have created the default rate that it happened, and it happened all of a sudden. It created a liquidity crisis that really well, we're still dealing with that, all of this quantitative easing over the last, 10 plus years has just done nothing but multiply huge amounts of money, debt into the system. So from a Bitcoin standpoint, this was the whole argument for Bitcoin. And breaking down, we talked about it getting back above that 1920. Everything looked decent from a buy standpoint on the daily standpoint. And nice bounce back well over to 22 on it. So everything is green so far this morning. ETH has been very nice. Just love the way it trades from the algo standpoint. And from an ES50K, it bought, what was that level? 37.69. So now just hitting 39. So it's a pretty decent buy. And then the secondary buy at the peak. From an intraday, well, we're all the way at the current run up here, all on positive extremes. So just keep that in mind. It literally creates a new upper level right there from a retrace standpoint, and then the series in between. So we had the significant downside on a breakdown, but most of the day was pretty irrelevant because you just had the spikes with a couple little declines. This was the most severe towards the later part of the day, and then it would just pop back up. You can see from the original breakout, magenta leading, DOC orange, all of the perfect configurations from those standpoints, and boom, this nice rally from there. So that's all pretty straightforward stuff. The bigger question is this longer term dynamic and how it's interplaying today, and the two camps, because we're starting to see that fissure grow. And the question is, when does that teeter to one side or the other? We already knew that the bearish side of the market had been oversaturated to the point where everyone was, short the market, in which case it's got to come up from there. And as soon as enough people flip to where maybe it's safe to get back in the water, that's when we will see the decline. So it's always counterintuitive, but that's the beauty of having the readings, so we can see exactly when those flips take place. As always, though, look for me on the Skype chat. Trade well. We'll talk to you later.